Voters. Half an hour to go for the union budget. Piyush Goyal will speak at 11, we hope. There is some rumor doing the rounds that apparently the farm package may be announced by the Prime Minister himself. So we'll see whether even Narendra Modi gets into the action this time with the budget speech. But we've got a packed panel with us over the next half an hour, and many of them will continue through till the end of the speech with us. We've got in our studio Ashok Wadhwa, always there on budget day with us. We've got Ramdev Agarwal of Motilal Oswal. We've got Mark Mobius of Mobius Capital joining us from Hong Kong, and many other speakers like Nirmal Jain of IIFL, Mahesh Nandurkar of CLSA, and Sajid Chenoy of JP Morgan. But first, good morning and hello to you, Sonia.
Hi, good morning, Udin. Good to have you here. You know, we were just speaking with Mark Mobius and we asked him what is the significance of the budget. And he started by saying we don't even know whether these numbers are credible. So that's what...
Mark said that?
He said that. You can ask him. But that's the issue that a lot of foreign investors have, right? I mean, the significance of the budget dwindling and credibility of the numbers. How does one address that?
Well, not just foreign investors. I think everybody should be asking those questions right now. And that, I think, has become the central thing on what do we believe, what do we base our analysis on. I mean, we've always known that the fiscal deficit number which is put out by any government, not just the India government, is a piece of jugglery. We've always known that. But right now, we've come to a point where we don't know whether that number is just a figment of somebody's imagination. The unemployment numbers which came out yesterday, which were leaked by the Business Standard, I think has put the cat among the pigeons. People are A, unhappy about the number, and B, how it was dealt with. So, you know, India was always seen as something which is not quite China. Nobody trusts or ever trusted Chinese data. India was never like that. Good or bad, we put it out, more or less put it out.
Yeah.
But I think a lot of foreign investors who have the option of looking at many countries, including India and China, are now asking that question legitimately, has India become a China? What do we make of this data? I heard a panelist on this channel in the morning saying, we are not going to go by any sets of data now which are put out like GDP, unemployment. We just want to go by the tax data because that is difficult to fudge. And that is a big statement, you know. So I think credibility has been shaken. And, you know, you take years and decades to build trust about data in a country. It can be broken very, very quickly. You do not want to be in that position. So whatever it is, my big imploring to this government would be, or to any government would be, it doesn't matter if you lose an election. It doesn't matter if people are angry for one set of promises that you've not been able to fulfill. But don't tinker with the data, because that affects us as a country, and you will not be able to roll it back as easily as you break this trust.
So in that context, since, you know, we are looking at perhaps some people are even talking about the fiscal deficit number being met this time by some cash accounting standards or whatever. You think that's a possibility, given that last year also there was a slippage and 2 years in a row a slippage may not look promising?
No, I think 3.3% is something which the government may well announce this time. Because the way this has worked, Sonia, as you well know, is that you first decide the number, then you work backwards. It's not like you do the numbers and say, oh, my fiscal deficit turned out to be 3.6%. It cannot work that way. You say my line in the sand is 3.3. Within that, whatever I can show above the line, I will show. Whatever I cannot show above the line, I'll toss across. So you will not see a lot of things in the budget, which will be off balance sheet, as we know. You know, look at Food Corporation of India. That's a classic case in point. You know, you add back those numbers, where are we? Close to 3.3%. So 3.3 has no relevance. The market only wants a signal. The signal is that, is the government going to pull out all the stops in an election year and become reckless? If it declares 3.3 or 3.4, the market will get the feeling or signal that they will not do that. They don't want to do that. If they say 3.6 and next year 4%, the market will get a signal more than the number itself that they're going to do anything now because of elections, and therefore fiscal rectitude goes out of the window. So I think we should not obsess about the number per se. We should just get the signal from the government. What are they saying in essence while putting out that number? Okay,
so I'm going to go to our guests in a bit, but just before that, one word on the market trend itself, because this underperformance is something we've seen all month, right, compared to emerging markets. You think that's going to continue because of political uncertainty and perhaps fiscal profligacy as well?
You know, it's difficult to say what happens on the day, Sonia, you know, because, you know, people have were short till yesterday. They covered up their short positions. Sometimes a large farm package might be construed by the market as stimulus, saying, We don't care about what happens to long-term macro picture, etc. We care about what will happen to consumption stocks because of the stimulus which is being put out. And therefore, the market's reaction on the day or for a few days may be something very different. Near term, we are still trapped in a range. Unless something major happens on the farm package, I think we remain trapped in that range. And the bigger problem, as we've discussed many times, is the broader market. People's portfolios are bleeding. It doesn't matter what the Nifty is telling you. I don't know whether the budget can change that.
Okay, well, let's get our guests on board. As we've been telling you, we have a very long lineup of guests. Ramdev Agarwal is here with us. Ramdev, hi, good morning. What would constitute a dream budget for you from a retail investor standpoint?
I mean, on the eve of this so-called political budget, I mean, election is right at the corner. To expect too much is also wrong. But my wish would be that they really look at seriously the DDT, Dividend Distribution Tax, right ab initio. I mean, from 5% in '98, it has gone to as high as 33%, which is not investor friendly or capital allocation friendly, I would say. I'm not meaning reduce the tax burden on the taxpayer, but the way you're taxing it, 22% dividend distribution tax and then 10% on top of it on the person who is receiving more than 10 lakhs dividend. So that 33%, that leads to a lot of capital misallocation at a corporate level. And that's why when the corporates don't distribute with the available resources, they end up doing some crazy things. I mean, auto company will do, textile guy will do, because you're not paying out. What do we do? There is no equity outside. So I think they must seriously look at it. I'm not meaning reducing the tax burden at all. But you should have a rational process whereby people can have a rational dividend policy.
Ashok, I want to ask you about direct taxes too, but I just want a word in with Mark Mobius before that. Mark, good morning to you. I'm joining in after you've already answered some of these questions, but I do want to scratch that point about this India's data credibility problem. In fact, more than the budget, the world is probably talking more about that this morning than anything else. How concerned are you? And what would your suggestion be to the government after all the confusion of the last 48 hours?
Well, I think your points are very well taken, and certainly there will be questions asked. The problem is when you get something like this in the headlines, people sitting in New York or London or elsewhere, they read the headline and say, oh, I'm not going to believe the Indian statistic anymore. And of course, that's sort of throwing the baby out with the bathwater. I'm still very confident that the numbers, generally speaking, are good because Indians, in my view, are the most numeric people in the world. So they do a very good job with statistics. But I do want to emphasize that anywhere you go with these statistics, a point here, a point there, 0.5, 0.6 doesn't mean anything because there's so many errors and omissions that take place in the gathering of these statistics. So we mustn't be too try to be too precise. And I think your point, what you just mentioned, is very well taken. What is the direction? Where is the government pointing? Where do they see themselves going in terms of how much they're going to give out for the election in order to be reelected and how much of a deficit they're going to program going forward? I think that's the most important question.
Your point too is very well taken, Mark, about Indians being a very numeric people. Sometimes we wonder whether we're too numeric and therefore we can be inventive with numbers as well as we are good at it. But Ashok Wadhwa, good to see you on Budget Day as always. Is there anything, before we talk about all this, anything that one should expect from a direct tax point of view at all in this budget? Let's get that out of the way.
Just continuing for a second on the point you all were making. We are a country of accountants, but we are also a country of engineers. So good balance between art and science is perhaps the right way.
You don't mean data engineering, don't you?
No.
Okay.
No. So precision is also a high quality of Indians. So I would say somewhere a balance between the two is the right answer. And as everybody said, it doesn't matter whether it's 0.5 or 0.6, so long as it's not 4 point something and 2 point something. This is an interim budget, and historically, over the last 3 presentations of interim budget, there hasn't been much on the direct tax, and rightly so. Sure. Having said that, I do believe, given the particularly positive outcome of direct tax collection in this current year, we had projected 14%, we're likely to deliver a 16% growth in this current year. I think given that, my own sense is, at the eve of the important political event, government will want to do something for the tax-paying salaried class. Remember, when you look at direct benefit transfers, you're looking at the farmer, you're looking at the landless laborers, you're looking at landed labor, but it's the tax-paying salaried middle class that's really been hurt, and that's an important constituency for any government.
Sure.
So I would think that there's going to be something in this budget which is going to be different from other interim budgets, but largely focused on that class. And the easier thing would be to increase the limit for exemption to a much higher number, and perhaps throw in some deductions around standard deduction, etc., etc. I think a feel-good factor for that community is perhaps going to be embedded in this budget.
Okay, being a part of that tax-paying salary class, I must tell you that a feel-good factor is really what we need at the moment. But let's talk about some of the macros, right? Sajid is also with us. Sajid, hi, morning. We've spoken about the fiscal deficit at length, so I'm going to ask you about the market borrowing number that the street can digest. The common view is that an estimate of 6.5 lakh crores is something that the street will be okay with. What's your own estimate? And also, do you expect a sharp increase in CPSE borrowing, something that has caused a lot of concern amongst economists over the last few months?
Morning, Sonia. You're right. I think the market, anything below a 6.5 trillion gross borrowing number will come as a positive surprise to markets. But Sonia, let's step back for a second and I think, make the point Ozir made earlier. There are two fiscal realities in India. One is the reality that we'll all focus on today. Markets will obsess about, is the deficit 3.3, is it 3.4, is gross borrowing 6.5 or 6.3? The second reality is the center is increasingly a growingly irrelevant part of the larger fiscal situation. If you add the center's deficit, the state deficits, central public sector enterprises and off-balance sheet borrowing, India's public sector borrowing requirements are above 8% of GDP, 8.2% of GDP last year. Those are the numbers that really, matter for the economy, not so much the center. So markets will focus on today's reality. I think what matters for the economy is the larger reality, that we just don't have any fiscal space. So I'm getting very nervous hearing the wish list over the last few days. We need a feel-good factor, we need an agrarian package, we need tax cuts, we need SME relief. The fact is this is a very delicate balancing act. We need to stay on a modest fiscal consolidation path. So any new initiatives announced today need to be paid for. I'm perfectly empathetic to the view that we require a safety net for farmers, but that will need to come in lieu of some of the existing welfare programs, not above. And it's that 8% of number, I think, which will keep interest rates elevated, keep the Monetary Policy Committee cautious, and ultimately run the risk of putting some pressure on India's external sector. Let's not take our eye off that ball.
We hear you, Sajid, but unfortunately, elections are too close for your words to be heeded in this statement, perhaps. Mark will leave us. Nirmal, I'm going to come to you in a second after I ask a last question to Mark, and he will join us again after the speech. A lot of this budget speech, Mark, is about the elections. In fact, before we let you go, I must ask you about the election itself, because that will be a consideration in your outlook on India. The signs for the current government have not been great over the last few months. What are you prepared for this May? After the Indian elections, what kind of government would you be okay with?
Well, we're preparing for a much weaker BJP, that's for sure, and the polls seem to indicate that. The ideal situation would be not too much weakness for the BJP and a coalition where they're the leading party, where they can continue to call the shots, so to speak, and continue the program of reform. That would be the best solution. And no problem with other parties coming in and being part of a coalition. In fact, it may be a good thing because it means they'll have other voices telling them what would be the right thing to do. But we hope that they still would be the leading voice.
All right, Mark, thank you so much for joining us. And we'll, of course, touch base with you once the budget is over. For now, just keep an eye out on the market. It's coming off a little bit. Private sector banks are under a bit of pressure. Kotak Mahindra Bank, ICICI Bank, Axis Bank are down about 0.5% apiece. Nirmal Jain is also with us. Nirmal, morning. Thank you for waiting by patiently. What would you look out for in this budget that would perhaps appease investors?
I think it's given that budget will be populist and they'll try to look at, for farmers, they'll try to look at middle class and lower income group. I would look out that they don't do something which is a little excessive in terms of giving away to farmers or maybe the loan waiver kind of things, or something similar to that. That doesn't happen. And, a bit of fiscal prudence. I mean, we can't expect any finance minister or any political party or government to be very, very sort of rational in these kind of, just on the eve of elections. But what I'm at least hoping is that there'll be some bit of prudence, and maybe populism is there. We are expecting it, but they won't go overboard on that.
Okay, well. Right. Well, let's also get Mahesh Nandurkar of CLSA. He's joining into the conversation as well. Mahesh, I wanted to ask you about the farm package itself. What is your expectation this time around, and what do you think the street can digest?
Well, I would say that, on a net basis, any new package that the government, would be talking about has to be, at least, let's say, like a 1 lakh crore or maybe north of that, if it to have any impact as such on rural incomes or the farmer incomes, which is say about 50 to 70 basis points of GDP. So clearly the impact on the fiscal will be to that extent, as I said, 50 to 70 on a consolidated basis. And also at the same time, we have to keep in mind that the revenue collection, which is GST, has been falling way short of its annual target, and what kind of assumption the government makes for next year, as well, would be crucial in coming up with that number. So I would broadly say that notwithstanding the macro impact, but any farmer package, or let's say the below poverty line cash transfer scheme, etc., which is being talked about in the media, would definitely be a positive, for the consumption stocks, especially the rural consumption stories. And if that number becomes too big, it can probably have a negative impact on some of the macro variables, and which can possibly reflect in the currency. So will to that extent have an impact on the exporting sectors as well.
Okay, well, just keep an eye out on some of these auto stocks. Maruti just came out with their sales numbers a while back. It was flat, the growth, but the stock is up 3.5%, perhaps in absence of any negative surprise. But Udin, I wanted to come to you on this farm package. The fear is not just of a package, but it being a recurring liability. What should one expect?
There will be a package, whether it's 1.2 lakh crores or closer to 2 lakh crores, we'll see. But, this is their last chance to do something for the rural populace before the elections. I think they'll put out something, a credible package. A lot has been said about the macro impact of the package and whether the revenues will support such a package in coming years. I want to make 2 points on what it does to 2 other things. One is what it does to the government's infrastructure capex, because you crowd out capex at a time when we do need a lot of capex, because private sector capex is still not picked up. The government is the one which has been standing behind it for the last 2-3 years. If you make a very large commitment towards the rural sector, I don't know how much, given GST collections, you will be left with to push infrastructure capex. And this is something that we need from a stock market point of view. The last man standing should not back off because he's just put out a very large farm package. That is one. B, there is a general thing that if you have a farm package, you should rush to buy two-wheeler stocks and Mahindra. You look at the numbers. What are we talking about? We are all agreed that mostly the package will come for small and marginal farmers with holdings of less than 5 acres. Let's say 3 acres is an average holding for the small and marginal farmer. You're talking about anything between 5,000 to 8,000 rupees per acre per year. Say it's 6,000 rupees. 3 acres into 6,000 rupees is 18,000 rupees a year or 1,500 rupees a month. You give a farmer 1,500 rupees a month and you say he'll buy tractors or two-wheelers. What does he buy? So the best you can hope for is companies like Emami, Dabur, maybe HUL. You buy a bit of soap, etc., consumables, which can get some kind of a... But to extend it to tractors and two-wheelers and Maruti small cars, I think is a giant leap with no reference to the numbers at all.
Oh, in any case, many of these two-wheeler stocks are at 52-week lows. You know, some of them have lost about.
And the two-wheeler king is sitting on your right.
Yeah, he is. You want to bust that myth, Ramdev, that you don't necessarily buy two-wheeler stocks when there's a farm package coming?
I mean, farm package is one thing, but actually the sector is suffering from this
high ownership cost,
high insurance cost,
yeah.
And now this BS6 is coming, so that will be one consolidated cost. But at the same time, it is expected that GST will come down from 28 to 18, so it will offset and all. But the demand level, I mean, the penetration levels are still so low that any kind of affordability improvement, say like even this 5,000-6,000 rupees per acre subsidy. I mean, it's going to be a year-long without any problem with the weather and all they get. I think it's a lot of money. At rural level, 18,000-20,000 rupees per household is a lot of money. I mean, at least, I mean, tractor is too far-fetched, but it can definitely help in two-wheeler to some extent.
Okay, let's take a break on that note. We still have about 15 minutes, so lots to talk about till Piyush Goyal presents the interim budget. We are back in a minute with all our experts.